Here we go. All right, good morning. This is the Hawkeye Wednesday session. I got Monday up here, but it's Wednesday. We're going to be going from 8 to 9:30, pretty much trying to stay with the basics this morning. And then after 9:30, we'll go for a little bit longer. I think we can go up to about 11 o'clock or 10:30 today. And we'll see how it goes, see if we get any trades set up. And we'll just see how it takes off. We haven't had any alerts since 3 o'clock this morning. So unless we get something, we'll do a recording on that and see where that takes us. But let's get the disclaimers out of the way. Trading the foreign exchange on margin carries a high level of risk and may not be suitable for all investors. The high degree of leverage can work against you as well as for you. Before deciding to invest in the foreign exchange, you should carefully consider your investment objectives, level of experience, and risk appetite. The possibility exists that you could sustain a loss of some or all of your initial investment, and therefore you should not invest money that you cannot afford to lose. You should be aware of all the risks associated with the foreign exchange trading and seek advice from an independent financial advisor if you have any doubts. This is a live trade room. It is for educational purposes only. No financial advice or recommendations will be provided. Any trades taken during the session is not a recommendation or suggestion that you should do the same. Past performance is not indicative of future results, and do not trade money you cannot afford to lose. Again, do not trade money that you cannot afford to lose. Before trading live, always operate with a written trade plan that identifies rules for entries, exits, targets, and risk management. When I said that with the do not trade money you cannot afford to lose. If you do the system that we do, and you can trade with money that you can afford to lose, you can grow that at pretty much, we've been doing pretty much a rate of about 2% a day on our trades. Take one trade a day. If we take the right size lot size, it's not hard to do 2% a day on your target. And if you can do 2% a day, that money that you can afford to lose now can grow into money that you would not want to lose. And then you're playing with the house's money. So learn the system, be patient, allow it to compound. And because more than likely, as you start off with this, you will probably lose that money that you set up when you can go demo. But once you go live, it's a whole different ball game. You still have the
Yep.
emotions, you have the head game that you have to play with and work with. And you'll find out that you will probably blow up your account. And you'll probably do it more than once. But if it's money that you afford to lose, you're still in the game. And as you get better and better and get more confident and more disciplined, that money that you can afford to lose will grow into something that will sustain you for the rest of your life. And that's all I have to say about that.
If I can add a little thing to that, actually, in the beginning, if you're starting to learn this strategy, I think the most important thing will be patient, because in the start it might look a little too technical and too difficult, but if you just hang on and try to follow this session every day, then yeah, like it did for me, the pieces of the puzzle will fall together and it will just be like a video game, or I don't know how to explain, but it will actually be really simple. So if you're patient and consistent, of course, you'll get there.
And that really is the key, patience and consistency.
Yep.
And if you have a losing trade in the day, just let it be a loss for the day. That's okay. You're not going to win every day. You're not going to win every trade. Yesterday was a good example. we got into we got into U.S. Swiss trade. It looked like it was going to break down. It went against us, stopped us out, and then you tried to get it back. All you do is compound the problem. Just wait for the trade alert, take the trade, get the setup, take the trade when it allows it, and then just be patient. If you lose it, just let it stop you out. Don't give yourself that 7 to 10 pip stop. That's usually enough to keep you in a winning trade to get your 5 to 7 pips, and just allow yourself to get stopped out. Because once you get stopped out, what that does, it resets your mindset as far as, okay, do I want to take this short? Well, the short didn't work out. It got stopped out. Now you can sit back. You're not in the trade. Now you can reevaluate the situation and see if it gives you the opportunity to get back in, or you just wait for another trade. The best information I can give you from the mental and the emotional standpoint of trading, and it will serve you well if you maintain that type of discipline. So, having said that, that's all I'm going to say about that. Let's
May I
go to
read
the.
a chat from Beach Panda?
Oh, yeah, please.
Yeah, he said, I can't stay on schedule conflict, but wanted to give an update to yesterday's USD CHF AIRIS alert. The technical analysis was spot on. The timing was off. I was in the trade until early this morning near the LOD. I wasn't expecting swing trade duration as AIRIS is scalping, but the TA was exactly as discussed. Matt is a ninja, secret assassin to the markets, and yesterday was proof. Al's analysis is awesome. Patience pays.
Oh, well, thank you,
Very nice.
Beach Panda. Yeah, that trade yesterday, I found it to be a rather frustrating, disappointing trade. I took a hit on that one. So, but that's just the way it goes. Like I said, that's trading. We're not going to win them all. My averages, I probably win about 65% of my trades. But if you can do it with uh, the discipline, if you can do it with the stops, and you do it with your targets, you'll find out that it will probably serve you pretty well. Let me go to my chart, and we can kind of go over that trade a little bit here since we don't have any other alerts. This might be a good lesson for to start the day. And let me get my screen sharing here. And share. So this is the trade that we were this is the trade we were looking at yesterday, and I did another analysis of this afterwards after we got done with the session, because it did kind of play with our heads a little bit. Here was the original wedge. Now I'll tell you what I'm going to do. I'm going to do a little replay on this. And this is probably the perfect one to replay. Now the Swiss has been basically trading in a rather it gets you in, it gets you out. It trades in a rather narrow range, and then it takes off. It doesn't seem to be playing in the sandbox very nicely these last couple of days. But we're going to take this one back, and we're going to take it right here. There's where the alert was yesterday. This is right at 7 o'clock. And I'm going to go on a 15-minute chart. And I'm going to take away I'm going to see. Let me take away some of this stuff here that we have here. There we go. This is what. I guess I'm going to have to erase it. I'll just redraw it. That's what we're going to do. Okay, so it was 7 o'clock yesterday. See, this is the 14th. It was on the 15th at 7 o'clock in the morning. Right on this candle. So this was a candle where we started. Let's go back to, okay, and this is what we were looking at when we got the alert. And so what I tried to do is I tried to find out where what we're really doing with these wedges. We're trying to find a high, find a low, find a lower high, in this case, find a higher low, which was like this one right here. So if we draw this from, let's just start from this area right here. Here's a high, here's a low, here's a lower high, here's a higher low. Now you can see where if you take the wedge from the bottom here, let's say here where the low was, right here, that was where this B mark was. You can see that where the D is, it's still a little bit of a higher. It wasn't much higher, but it was a little bit higher. So, and then you can come over here. Now I'm going way back here to give you to see where this is all going. So over here, now you have a lower high. Here you have a higher low. Here you have a lower high. And you look and see where this C is here, you see now rather than having a higher low, you have a lower high. So we're going to take this one down here. So this is where the game's starting to change, because now we had that trending of lower high, higher low, lower high, higher low. Well, now this one got broke. However, we see where the B is. In reference to the B, it's still a higher low. So this is the area where it started to change, right in this area. So let's take this thing over to where the current time is here. So let's go back over to the current day. And so here's a high, here is a low. We're looking at, oh, let me get this right. From here to here. So high, a low. And you can see this made a series of lower highs, pretty much all the way down to this point right here. You can see this one changed. We had a little bit of this was a high, this was a lower high. If you look at this point right here where the C is, you'll see it's still, even though it doesn't look like it much, if you put a line across, you can see this still made a lower high. So that's still good. So everything's still in tech. Here's the next lower high. So here, bring this down. So, and you can see where here's the anchor, here's a hit, here's a hit, here's a hit, here's a hit. This is a major trend line right here. It's been tested 1, 2, 3, and this is the 4th time. If I go all the way back to this candle right here, you can see that the trend line got tested again right here before it dropped off. So this is a valid trend line. And that's going to be that's what I'm going to be looking at as the main trend line that we're looking at. So we're going to go from here. I'm going to draw this one purple. So that's the main one. That's the main one that we're looking at here. We had a low, lower low, lower low. So I can take this one over here, because here's where the alert was. So this was a trending, there's a lower trend line all the way coming down. This was the one that was, this one's been validated. And so here's where the alert came in. And it came in as a ascending wedge. I believe this one was an ascending wedge. But you can see how this thing was trending on up before we got the alert. And so this one is I'm going to call this our main wedge, which is I've usually put in orange. But now we have the secondary wedge that we're looking at. So let's draw this, put this into a 5-minute time frame. I'm going to blow it up here. And you can see that here's the main one where we're saying this C is a strong line of resistance right up in here. Here's where we got the alert. This is the area when you get these wedges, usually it's at the end of a move. So here's the move that came down. Here's the end of the move. And did we just get another alert here? No. Okay. So this is the wedge we're looking at. So I'm going to be, and it really doesn't matter. It doesn't really matter a whole lot right now whether it's an ascending wedge or descending wedge. What's important is there a wedge there, and can you make any sense out of it? So, and I'm going to draw this, make this one yellow. So here's a secondary wedge right here. So here's where the alert was. We still have, you can see where from the C to where the D is. Actually, we can just pretty much put this right flat. We're not really worried about this line right here right now. What we are concerned about this one way up in here. So basically this D we can actually put on up in line with the CD leg. And oh wait, we went the AC leg. Let's disregard that. We went B and D. There we go. We'll just flatten this one out. We can actually pull this out over here. So now we know that we had the alert. So this is another major trend line right through here. And so then we had the alert and it broke down. And you can see where it actually broke, where this line is. That was the open of the candle where the alert came in. So when we drew the wedge, we really had to use the bottom of the candle, of the wick of the candle before where the alert came in, because when the alert came in, whatever the algorithm was that the alerts was looking at, it said, here's where the wedge is going to be. So you really can't count this candle. This is still a live candle after the alert. So I can tuck this one in over here, right underneath this little blue candle before the alert. I'm on a 5-minute chart right now. And you can see we had a little drop. And here's a little doji candle. And then we had a nice big drop after that. You had to be on this chart looking at it right when you got the alert to be able to catch this break. But here's your anchor, here's your hit, here's your hit, here's your hit, here's the break. But you can see when it broke right down, and it's pretty much stopped right here once after this 5-minute candle. Now, what we're looking for is we're looking to see, is it going to break this? We're also going to be looking to the left, a little further to the left, and you're going to see where was the biggest move. Where is there a place where when you draw these wedges or triangles, you can see this one is a little bit, yeah, right there. I could actually take this thing over here on a higher time frame chart. This is still valid, but now where did when this A was formed, where did it come from? It came from down here. So you're really looking at, this is the area that we're looking at. This was a low. This is where this area right in here is where the buyers came into play. Right on these wicks, right here is where they came in. And so what we're looking for is whatever the move is, we're looking for it to come down and test that. Then we're going to come over here a little bit further, and this is really where this thing came in and it dropped. This is the area we were looking at trying to break yesterday. That little zone right here. This is actually a demand zone. This is where this big move came up. It couldn't go any lower than this, and then it came back and pushed it up. But so you come over a little bit further, and you can see that this is like on this 1 hour chart, there was 1, 2, 3. In 4 hours, it went there. You see no blue candles, and it went like straight up. This is the origin of this big move. So once this one gets broken, this is the area we're looking at. This is why we were kind of focused on trying to catch the break of that to come all the way down to here. This is what the origin of it. So let's just move that in here. So we're going to mark this as an area. Here's the bottom of the blue candle. Here's the bottom of the wick. All this is free flow. Like once it breaks this area, once it breaks this 90.54, this is where it's headed. I mean, it's not going to take just a straight shot, but you can see there's not a whole lot. There's not one red candle in this. If you look at this area right in here, just this move alone, and you put this on a 15-minute chart, and you slide on over to it. Let's see where it was. Let me see what time that was. This was at September 1st-ish. So let me go to a 15-minute chart. Go to September 1st. This is that area that you can see that even on a 15-minute chart, there was this was where it started, came on up, had a little basing in here. And it came up, we had a little basing in here. Now this is the area where it's at right now on this basing area, and then it kept on going up, and you'll see that it did that again. So I'm going to be looking at this here. These are 15-minute pullbacks. So now if I come over and just extend these over, these are the different ranges on a 15-minute chart. Just where we at here? We have a long ways to go. Let me go to 1 hour. Let's see if it'll show it on the daily. It may not show it on the daily. Here we go. Let's just take these pulleys on over. So here's where we are right now. You can see this was these are the three zones we had. You can see how this thing just stayed within those zones. This was the area we were looking for it to break, and we were looking for it to come down there. Just double check we don't get any more alerts here. Nope, not yet. Okay, we're still good. So on our replay, this is where we were at. So let me back this up to a 5-minute chart. And I'm just going to make this area. So right now we're basically in a higher time frame demand zone, and it's trying to break through. So let me just change the settings on this so we can see the background of it. And I'm going to make this one white. Put a white border in here. And I'm just going to take this one off for right now. Just delete that. So here's where we are. This is where we were yesterday morning. Came down, tested this. We were looking for it to break and come back down. It never did. So let's start playing so once we got down here, this is the main wedge that we're looking at, the orange one. That's the main wedge we're looking at. You can see this is still the zone that we drew we're in a demand zone right now. And we're waiting for that demand zone to break and come back and test this. And oftentimes, if you have a level on a level, it'll break the first level, come back down, test the second level, and then it'll shoot back up. And that's what we were looking at yesterday. It just didn't happen. So we're going to play this thing candle by candle. There was a break. There was a wick. You can see, now I'm just going to move this out of the way because that's the playground we were in. But we're inside this wedge. It came down and broke it, barely closed below. And I said, well, when we do these, I like to tuck these in as close as we can. And so what I'm looking at is I'm looking for a close below this B level. And once we get the close, I'm looking at a area to, let me draw this. This is going to be a replay of what we did yesterday. And we'll keep doing this until we get an alert this morning. Let's see where we, this is the template I want here. Enter to close. So we have this enter to close button. So on our 5-minute chart, we drew our wedge. We drew the secondary wedge, which is the yellow one. And we have this little pivot. Here's this little blue candle right here is where we have buyers that came in right in this area. So what I want to see this thing break. I'd like to see a close below the close here. So you have a lower close, which is this candle right here. But I'd like to see it close inside this and maybe even a little bit lower. But primarily I want to see a close below. I'd like to see a wick below the A, and I'd like to see a close below this candle here. And actually it did. It came right in. Well, actually, it closed right at the A. It broke the wedge. It barely broke this first wedge. I would like to see it actually close inside that zone like that. And this first one, it didn't, just barely. It came in, broke through, had this nice little wick, and it closed in. So we thought, okay, here it broke the wedge. Now, we got into the trade over in this area right here. So this is where we entered it. Someplace we got our fill somewhere in between in here. And this was an enter to sell right in that area. And then we go and we play again. Next candle, still looking good. It's basing in here, still looking for this to come down. Still basing. And now, right now we have this wedge is coming back into the wedge a little bit, but all these moving averages are pointing straight on down. So that's still a good sign. Even if it were to come back, it should still not really close above this yellow one right here. And ideally, this purple one is a major one that we look at. And so I'm going to go with the 5 minutes. This is the 5 minute 62 moving average. I'm just going to stay on a 5-minute chart because of the 1 minute I'll probably lose my drawing if I do it in 1 minute. So here's the pivot low. Again, this area right in here, this little doji was significant. Here's a drop, it based in here, and it came right out of that area. If it came back up to retest this area, I would not be surprised, and I was okay with that. And if you look and see what the pip value was from where we potentially got in to come up here, that's our 10 pips. And it's still a lot of strong down move. I'm not really expecting, I wouldn't be surprised to see this get tested, but I wasn't really thinking it was going to get that because of the strong move, looking at a strong move down, basing. Here's a nice little wedge developing, and then looking for it to break again. So I was going to give it plenty of room to come back and retrace, because the more it pulls back, the harder it's going to fall. Come back in, it came back. Nice, that was a strong rejection of this area, but came right up to the yellow moving average, or 13. Came up, so still testing. If you look at the distance from here to here to up here, it should be probably within our 38, certainly less than 50% of this move. Going up into that area. Right now, that was a, actually that was a 50, that's about a little bit more than 40% move to this high. Strong pullback, still within reason. Still would be looking at a target down here off of this pullback. Still looking at having a target of somewhere in this area right here. This would be a target. Take this off. We don't need this anymore. Take the next candle. Strong rejection from this point. Coming back down. All systems are still go. Still thinking it's going to be good. Now we still like to see another close break in between here. This was just the pullback. We took some heat, but we're still well within our 10 pip stop range. I can move this thing down a little bit. Next candle. Now it's basing, so we have a nice little trend line. We have a nice little wedge developing in here. Again, wedges are continuation, but this is just on a smaller scale. Same thing as what happened here on the bigger scale. We're doing the same thing that's happening here. Small wedge, come down, we get a breakthrough, we're still good. Right now, there's no reason to get out of this trade. This thing's coming down a little bit more.
Matt will come in the room any minute now. He overslept.
Oh, okay. All right, well, we'll see when Matt gets here. And it came back down, still rejecting it. Now, here's where things were beginning to materialize that things may not be working very well. Because we had the wedge, it broke out the bottom, so that's all good. So we had this area right here, broke out, closed below this C. And here's an anchor, here's a hit. Now we have the break of this. Still no reason to think this thing's not going to keep on going. And this was where the trouble started, right here. Still below our 62, so that's still coming down. And still good, because we're still looking for a bounce off the 62 to come back down again. It's still following this trend line. Now it did make a little bit higher high. So remember we were saying we want a low, a higher low, a lower high. This low got broken. This one still held. But now it is starting, if you look at this move here, we're starting a high, a low, lower high, lower low to this one, but not to this one. So the wedge is still valid. Now it broke the top of the wedge on this case, but we still have the 62 sitting here. That's going to be a problem for us. Next candle. Big rejection off that 62 area. Again, this was a fake out, so there's no reason to believe in that. Okay, it broke it on the top here, but really couldn't close above this little red candle here. So everything is still, this is just what we call a trap, kind of looking at this being a trap, strong rejection down, still in the trade, no reason not to. Now the time factor is developing a little bit longer. We went from 7 o'clock to, let's see, this was at 7 o'clock where the whole thing started. We got into this, say roughly around 7, I got in by about 7 o'clock. We're already at 9 o'clock, 9:20, and we still haven't broken this thing. And I'm going to start looking at that a little bit closer about how long from the time we got into the trade do we get it to develop. And I'm going to be looking at, if it doesn't develop close to at least by 8:30, within being by the 8:30 candle, this thing should pretty well be developed. And there again, we're at 8:30, strong move down, still thinking this is going to go. Now we have an inside candle. Here's a engulfing candle. We have a blue candle inside of this. Here's really where our new range is, from this candle here to this candle. So right now, this is we need this thing to break to the bottom. If it breaks to the top, now we got this trend line that we're looking at from here is still valid. We don't have any hits from here. From this one, no hits yet. So I would expect if it breaks this, it's going to retest this trend line here or give us something to look at here. This is where the trouble began, but came in, that validated this line here. So we can take this and put this one on up. Helps to reconfirm this. It just pretty much went back up into the wedge. This line was still valid. This was our smaller wedge, remember, came up here, tested it, rejected it, took a little bit of heat. Now from that, we probably got stopped out. Let me see if we got in here. We got up here, this 13 pips. If we had a 10 pip stop, we were stopped out. So, and this is where you run into trouble if you say, man, it rejected it. I think I'm gonna stay in this thing. So you already, if you didn't have your stop in, if you didn't get stopped out completely, you'd still be in the trade saying, well, I think I'm gonna hang on to a little bit longer. And that's pretty much what I did. I said, I'm gonna hang on to a little bit longer because I'm still looking at this area up here is still where it's gotta go. And that's a long way to go. Next candle. We had two strong candles, broke us up. And now I said, okay, well, if I didn't take my stop here,
Al, we lost your audio.
I think he lost connection.
Oh, okay.
He froze.
Yeah.
The screen is frozen.
Yeah, I've been dealing with some computer problems, and I woke up with a huge migraine. So sorry, I'm running a little bit late this morning.
It's okay. You're still like early baby, calendar time frame.
Yeah,
Not as much rest.
it's a little bit challenging.
Yeah.
So anyway, yeah, I think he lost his connection altogether.
I'm gonna message him.
Yeah, we'll see. We'll see what's going on.
Yeah, he was doing a really good play-by-play.
Play-by-play on what currency pair?
The USD CHF from yesterday.
Oh, okay.
did I lose everybody?
Yeah, there you are.
Hey.
Welcome back, man.
Wow, what was happening?
We don't have your screen either.
Okay, well, thanks for telling me. I didn't realize I was talking. How long was I talking to myself?
Well, just for about
A minute or two, maybe.
Yeah,
Okay.
three or 4 minutes or so.
Really? Okay.
Yeah, just long enough that we could
We had
Did you hear
two
this?
strong candles up. That was
Okay.
the last.
That was last.
You were
Okay.
talking about being stopped if you would have been stopped out.
Right, we should have been stopped out down here.
That's it.
And right, and if we had taken the stop down here, we obviously said, okay, well, crap, we got stopped out, we lost 10 pips. Not a big deal. It's not going to change the world. But now if you don't have your stop here and don't get stopped out, now you start playing the head game. Head game says, well, I didn't get stopped out here. I'm just going to hang on to it. I'm going to use my visual stop. I'm just going to wait. If you don't have your oh crap stops to where you're feel comfortable with it, then you say, okay, I didn't get stopped out here. Now you get the strong other candle. Now you're being down 10 pips. Now you're down 22 pips from if you got in down here. So now you have a problem. You say, well, I don't want to take the loss because I still think it's going to go short. Well, so then you say, well, maybe I'll take another position, and because that way I'll average out my position, and things will be all better again. And sometimes that will work. But the problem is you have this thing up here. You're getting close to that. So now you can say, well, if I take my stop here, and it does go up here, I can take another position, which is not a bad way to go. But I already took the 20 pip hit, or I'm just going to stay in. I'm going to wait and come up here, and maybe I can take another position, dollar cost average to come down here, and life will be good again. So that's what happens. So anyway, here's where we start running into. Here's where we start running into problems. We have this strong rejection. It broke this engulfing candle, this red engulfing candle. It broke that, closed above it, still held below our secondary wedge. Never did give us the break below here, which is we're looking for this part down here. Now we have this area we're looking at, and this is still, remember, this was a real high time frame upper parallel trend line. So here we go again. A little bit of basic. Now we say, okay, well, we go, boy, yeah, that was close. I'm still in the trade. I'm still underwater by probably 11 pips, but now I'm okay. Well, now it's looking to test this line. So this one is now become, so we had all this area down here. This broke. This couldn't break. We have this basing down here, rejects the basing, comes back up, takes out this pivot. And this is where we should have said, okay, I'm going to cut my losses. I'm going to get out of this trade here. And worst case scenario is it'll come back in, give me another shot at it, and maybe head on down. Here we go. Here's the rest of the story. Come back down, tested the wedge, broke down, couldn't close very deep into the wedge. Still, now my moving averages have all switched over. The 62 and the 13. When these two switch over, when the 62 and the 13 switch, and they're starting to point up, here's where we missed the deal right here, because this is the area where now the moving average have changed. Now we're still looking for it, but now what we need to do is get it to break above this area, this point right here. But right now we already have a problem because we wanted to go short. We're still in short. It came back down, gave us a little bit of a chance to get out of it with a little bit of damage, maybe 10 pips or so. Because our mind is still saying it's going to break down here. Our mind's still saying it's come down here. It's not really thinking about this part because we never really drew this yesterday. I'm going to start drawing these higher time frame levels because they're significant. Comes back down. I was like, okay, wow, it's going to make another run for the low again. But this is where this pair has been brutal when it comes to stuff like this, and it just stays in there for a while. And then you say, okay, here's a nice low hit. Now we have a head and shoulders. Comes back in. It's going to make another. Well, no, it didn't. It's going to come up and retest this one. And see these. I mean, these are 5-minute candles, but look at the size of these things. Normally, a 5-minute candle is 5 pips is normal. We've got 12 pips. We've got this one over here is probably, this is probably 15 pip candle. These are huge candles. And this is where you start getting whipsaw. This is where it starts playing with your mind, playing with your account. You're better off to just say, you know what, I'm going to wait till it gets up here. I might take another look at it. But you just hang on to trades, and then you say, so you come up here, oh, I'm going to take it short again. Oh, I'm going to take it short again. Because your mind's still saying you're coming down here. And this is where the head game is. And that's where you just have to say, get out of the trade, reevaluate, wait for it to come on up because this thing's not playing very nicely. Comes back up. Big candles. And there's the test. And this, I believe Matt took this thing short up in here. And he said, okay, well, this is a major line. You can say, okay, if I don't get a break up here, maybe I should take this thing short. So you go up here and say, okay, I got stopped out. I took all the pain. Now I'm up here. I'm thinking this thing's going to break out. Well, it didn't break out yet. So you think, well, maybe this thing's going to break out. We'll go to the other side. This is how we think. There's got a wick up. Wow, here's our, this line here is in line. Actually, here's where we want to see it close above. Didn't close above it yet. Came on up. We have, it's 8 pips to, see, that's at 88. You have about 6 pips to the line. We don't even have a close above this trend line. It wicked up. This is a trap. This is a potential trap to here. From this area to here, that's a potential. You got to be careful in this area like that, because you know we need to get it. This is as high as it was over here off the C. This is a major hit on this major trend line. Get another hit. So this is still validating the trend line, because we just have this little wick up here. I'd like to see it close. I'd like to see a wick above here, get a newer high, and close in here above the previous high close. Came up, rejection. So if you did take it short, you say, okay, I could take it short. Now, if you take it short here, you only have, if you're right about this trend line being valid and holding, you have a 5 pip risk here. So you're risking 5 pips. You think, okay, I'm going to risk 5 pips to possibly make, if I can get here, to make 11. That's not bad. That's 2 to 1. So I think, okay, I'm going to take this and I'm going to look and see if it's going to come back and retest this trend line here. And didn't test it. Now we have, okay, now you're saying, oh, here's where you get beat up. Came up here. Now you would have made your probably 5 pips off of this. There's 8 pips. You could have gotten your 5 pips, maybe even 7, depending on where you got in. And you say, okay, and you say, thank you for my daily bread. This held. I'm gonna come back. Now you look and say, okay, well, now this thing's starting to break. Still hasn't made a new high. It's now closed inside this area. It's closed above the wedge. But if you see where this thing closed, that's where it closed. Take a look over here and see, what did it close above? Well, it didn't close above this blue candle. If you look at this blue candle right here, it didn't close above that. It closed above this one, but this is another area where that was rejected all the way back here. When this thing came up from this point here, came back down, and it broke these top blue candles, came back, retested this area. This is really the high that you have to be looking at to see it really close above. You don't see it close above, somewhere in that area right there. Come over here, you can see these 2 yellow lines. It didn't close in there. It closed above the wedge, but it didn't close above the previous close way over here. Let's see again. Check the next one. Another rejection. Coming back up. Again, didn't close. It hasn't been able to close above this one. There we go. Still has a close. So right now, for another, 1, 2, 3, 4, 5, 6, 7. For another 40 minutes so far, you're still sitting here wondering what the heck to do. All right, now we have a close. Again, didn't close above this blue candle. It wicked up. This area right here, all you have is wicks in there. Now, what time is this right now? Now we're at noontime. So the noon, the Swiss is probably just, the Europe's just about done trading. Now it's just the US is taking over. We're at noontime. We started this thing at 6 o'clock in the morning. We're at 5 hours into this trade already. Once it kind of doesn't pan out and you get stopped out, just look for the next trade. And so this keeps basing. It's still respecting the trend line, this major trend line here. Still in here. So and how long do you want to sit and watch this thing? Again, we still don't have a close above this area. Still don't have the close above it. Now it's broke the tip of this major trend line. Now it's coming back into the close below here. And now we're only to 5 o'clock. So basically, you've been spent all day trying to waiting for this thing to break through. Now let me just fast forward here a little bit, and we'll go and take some questions if anybody has any questions. Here's where it finally, after all this time, it finally broke into here. What time is this right now? Right now we're at 9 o'clock last night. It comes up into here, finally get a close into this zone, and boom, there it goes. But it didn't really go very far. Now it's back into the moving averages again. And I'll just play this thing out. So the key is if you just allowed, the moral of the story is if you just allowed yourself to get stopped out the first time, hit the top of this other parallel wedge, the top of the trend line, you could take another shot at, you could made another, you made your profit back or your loss back, and then you just say that was just the best we did that day. And it just goes on and on. Came back down, and now it's probably retesting the bottom of this area. And we don't have any alerts. And anyway, that's the way that's the way the game was played yesterday.
Very sad we don't have any alerts since
I'm
5 or 6 hours already.
I'm surprised we don't have any alerts today. There is some news today. Let me just check the news.
It just passed 15 minutes ago. It was less than forecast, but the dollar did get a little bit stronger.
I had my Forex factory here someplace.
But tonight there's tonight, for me this is tonight. In a couple of hours there's the FOMC press conference, and we're.
I had this news, the Forex factory. I had it someplace here. I took it. I need to put it back on one of my little Forex factory. Let's see where to go.
8 o'clock. I think that's 3 o'clock for you guys.
Let me just type in Forex factory. Forex Factory News. Let's see. Forex Factory Calendar. There we go. So we are at, where are we at here? We are at September. Whoops, just go back to one. That's next week. Monday, Tuesday, Wednesday. Today is Wednesday. And you see we have US 8:30. We have US red folder at today at 8:30. So that already happened here. So,
yep.
And we have some more news at 10:30. So we have a lot of red folders here today. So maybe that's one reason why we're not getting. But we have to be careful with the US today. 8:30, that's already passed. So whatever happened then should be done. And next one is going to be pretty much, here's a crude oil inventory reports at 10:30. We have to pay attention to that one, especially with the US CAD, and 2 o'clock. So that's probably one reason why we're not getting a lot of alerts here today. Put her in there. So, do we have any questions? I'm going to, if anybody has any questions, go ahead and raise your hand. We'll turn your mic on and you can speak away.
Just commentary from Beach Panda. LOL, yes, I know we were in that trade for hours and hours and hours and overnight, but Al's analysis and logic reasoning behind the TA was spot on. At around 6:30 a.m. Eastern Standard Time was the LOD in time to exit the short. Didn't you all get the 7 a.m. Kiwi US descending alert? I rechecked that and I did not have that alert.
7 Kiwi, that was yesterday. That was the 15th. Yes, it was 15th. So let's see, 15th.
He has it as 7 a.m. Eastern, but I don't have anything. No, from today, Al.
Oh, for today. Oh, today.
Yes.
I did 7 days. Nope, I did not get that.
I didn't
Yeah.
get one
Me
either.
neither.
What
We have it
alert?
descending at 3 a.m., but not at 7 a.m.
Let me refresh this thing again. It should be, yeah, right now. The last one I got was at 3 o'clock this morning. Let me
Yeah.
check something else.
He says, how do I post a screenshot?
Um,
Sorry, Beach Panda.
Let's put it in the chat and then then Al can open it. I think, and then you can share it, right, Al, that way?
yeah, we can try. Well, to tell you what we can do here is, yeah, see if you can put it in. I'm not sure. Yeah, I'd like to see what you saw because I'm not seeing it. If you can put it in the chat.
Wow. Okay, so you had one at 5:45 a.m. as well.
U.S. Swiss.
Yeah, so if you could take like a snap, like a screenshot of it and then
I'm not,
post it
is it
in
in the
the
chat? Is that what it is? It's in this,
Yes, it's in the chat, Al.
hang on, looking here.
He hasn't posted the link yet.
Right.
Oh, okay.
I'm sorry. This is correct. I thought you meant where's the conversation in.
Yeah. Yeah, I would like to know why, if you got that, I'd like to know why you, are you in the Eastern time zone? Beach Panda?
Probably trying to get his screenshot together.
I'll tell you,
Alan,
I'm gonna allow you to talk if you have your microphone on. You can speak to us.
Speak to us.
in the meantime, Beach Panda did post a really nice commentary about your teaching and whatnot in the Q&A. So when you have a moment, it's quite long, so read through it. I didn't want to read it through.
Oh, okay.
Okay, so it'll be under the answered tab. Oh, it's okay. He's working on it.
Okay. I'm looking and reading his post here. Yeah, I think, yeah, thank you for the comment, Beach Bandits. I appreciate it. I don't want to read through the whole thing, but yeah, he basically his analysis was he was, I think his analysis was spot on, and he was just confirming my analysis. I would have to say. So thank you so much for that. And yeah, the Swiss has caused me some problems. Last Friday it caused me some problems, and this week it caused me some problems. And again, all I can say is I stress the discipline, and I'm speaking for myself as well as everybody else. It's easy to just say I'm just going to hang on to this trade a little bit longer, and just know that we have 7 pip and 10 or 10 pips. I mean, I'm okay with the 10 pips swap, or even 15 pips. I'm okay with. But when you start getting up into 21 pips, when the normal move is 5, you're just asking to. Sometimes you can dig out of it, and I've done that. I've dug it out and said, "Well, phew, made that," but it doesn't help with your psyche. It doesn't help with your trade plan, and ultimately, it doesn't help with your performance. So just if you're willing to take a 2% win, you should be able to be willing to take a 2% loss, knowing that your losses are going to be fewer than your wins, and you're still going to be profitable in the end, and you're going to hang on to your account and let that small account grow into a larger account for yourself. And let's take a look at the New Zealand. It was the New Zealand that we were looking at that he said he had some alerts on.
I thought he said it was the Swiss that he had the alerts on this morning. He had one on the Swiss and yes, New Zealand.
Let's
He's
take a look
multitasking.
Yeah, I understand the problem sometimes. All right,
That's okay.
here's the Swiss. Let me clear this all off of the Swiss. Take this moving averages off right now. And oftentimes too is that as we do these classes and sessions, your eyes are going to start seeing on different pairs. You're going to be able to see different formations of wedges. I've actually started trading the wedges on the futures a little bit, and using the same. I don't have the alerts that come out, but I'm looking at the same price patterns and trying to see where it gets to where you can maybe do something with it. And so right now I'm looking, right now I'm on the US Swiss. Let's just sort of draw this out. We don't have an alert on this, but let's just see if there's something that makes sense. We have a high, a low. This high got broken right here. So, and I said, you can do this on other pairs without getting the alerts. And it will help. It just, all it's going to do is help you to see these things a little bit better. So now we have this, let me make this yellow so that, and make this, okay, so we make this. So, we had a high, come all the way down here. Here's the area that was now engulfing. You can actually, do you see a W here? You see from here's one leg of the W, here's the bottom leg of the W, and then it came up and it's retesting this. Look for M's and W's. This area right here is an area that needs to be paid attention to. The wicks of this from here to here. Pay attention to this wick over here. So if you have this strong move down, came up, retested this area, came down, retested this, you can see that we had a little bit of trend going here. We had some consolidation over here, came back down, broke all that. This area still held. So if I look at this area over here, see this, look for these strong moves out of this. Like this is like a rocket ship, just a launching of a rocket. There's some buyers down here they ran out of sellers in this area. They ran out of the sellers. So let's just take it to the top of that red candle there, to the bottom of this wick. There's our zone. You see how it came down and tested this zone. Came on up, tested this, never even got up to it. Came down, retested this zone. Again, all you're seeing is wicks down here. When all you see is wicks down here, look for the reversal. These are good areas to where if you look at this area right in here, I'm on a 30-minute chart. If you just look at this little area right in here, and you go to a 5-minute chart, if I can find it here. You come into a 5-minute chart. This is a higher time frame. This was off a 30-minute pullback. Origin came in here. So we can say this is a supply zone. We can say that this is a demand zone. And now we have this strong move down. See it, this candle right here, this 15-minute candle came straight down, came back into here and tested it. Now, is there something we can find right in this little area right here? Is there something we can find that would make sense to take this thing long? And so we put our moving averages. Let's spread this thing out. In fact, let me see if I can. And let's do a replay on this. I'm going to spread this out a little bit so we can see it a little bit better. See this big move down, straight down, came down, and it formed our little wedge right in here. This is what I'm trying to get you guys to see as you're looking at this stuff. Here's a hit, here's a hit. Now we don't know where the bottom is on this, but now we have our BDAC wedge. Let's put it, I don't know if we can put it on a 1 minute or not. Let's see if we can do it on a 1 minute. Yep, we did. Let's just take this out. This is let me take this away. Oh crap, don't tell me I did that.
What'd you do?
I think I tried to hit the delete, but I think I deleted the whole thing that I did.
Oh, now we have an alert.
Oh, well, let's just go to,
It's just
oh, our favorite pair, our US Swiss. Oh, I love
Yay!
it. I love
Round two.
it. Round 2 or 3. Okay, let's
Yeah.
take a look at it. Let's take a look at it. Let's go with US. Let's move this over here. 9 o'clock, US Swiss. And we're not going to revenge trade this thing, just so you know. We're not going to revenge trade it. We're not going to say, okay, that took us yesterday. We're going to get it back today. No.
No emotion.
shake out the emotions.
What is that thing between the ears thing? Right?
Yeah, the BTE indicator.
BTE
The
indicator.
BTE indicator, the between the ears indicator. Okay, so we have a Swiss ascending 9 o'clock. What time is it? It's 9 o'clock. Here's our alert, 9 o'clock right there. We're on a 15-minute chart. We're just going to look at that. And we are going to look for our significant high and significant low. And let's see. Now we can see that the moving average is on this 15-minute. We can see that they're all moving down, but now we're getting this crossover here. So this is I'm looking to see where the significant high in the last couple of days are. So right now, for the last couple of days, it's playing inside this area right in here. So there's our high.
All right, Al, I have the screenshot whenever we want to see it. And he did get a couple of alerts that we didn't get.
Really? Okay. We'll hang on to that one, Eva.
Yeah, we'll watch. We'll see it after you do what you're doing here.
Yeah. So right now I'm looking, let's get on a 30-minute. Let's just see if there's any other, this is the area we were looking at yesterday. Remember that W I was telling you about? Look for these M's and W's. I'm be looking at this area right here. I'm looking at this area as a area to know that that was a significant high. You couldn't break this. And we're at, where are we at here? See this big wick right here? This was a, let's see what it looks like on a 15-minute chart. This was a pretty strong rejection off. So here's our down move. This is the area that I'm probably looking at, this area right in here. I'm just going to draw a box around it. It broke out of that. We have this little area. Let's see. So here's our trend line for right now. I see a trend from here to here. This thing broke. Look at it. This broke way up here. Couldn't break this. So right now I'm going to be looking at moving this down here. It's got to break. It's got to be able to break through that. Here's a red candle that I want to see it break above. Here's a lower one. Right over here. That's the lower one. So right now, this thing came up, and this is the zone it's looking at right now, right in here. Here's an anchor. Here's a hit. Here's a breach of the hit, but here's the trap. And so to draw this wedge on this, in this particular case, I'd have to be looking at this major trend line right here. And I'm going to be looking at this pivot low. So I'm going to draw my wedge from this pivot low to this high, to this low. And this was the high before the alert. Here's my orange wedge. Anybody see that? Follow that? And we're going to go to a 5-minute chart, and we're going to just tweak this a little bit. So here was a high. This one's still good. I'll just tuck this one in over here. Come over here from my A. Here's my A. And you can see the A and the C is almost right flat across. And so right now, this is going to be a trap right in here. If I take this, it's only going to be in demo just to see if the joins are still. When you draw things out and they don't play out, then you may just want to keep drawing them and then take them in demo. Just because sometimes the market just changes. Plain and simple. And then you have to be able to adjust with that. Source supply. Okay, so we have, this was a major hit. Now you can see where this candle right here, it broke that purple trend line that we have, but it still respected this level right here. And since we started that, let me see if there's another area up here that we can look at to find that higher trend, the higher trade. There's yeah, it's way up in here. No, we're not going to do that. So we have so now let's go to our 5-minute chart. Right now it's still inside that orange wedge, so we're not going to do anything right now. This thing is it breached that. I'll put that on up here because now that helps to support where the D is. Anchor, it's a near hit, so we'd have to respect this area right in here. We have to respect this. And then we're going to have to see what's going to happen down below here. And we know that there's a lot of buyers and sellers battling it out in this area where this green box is. If we get the break below the C, I'd have to see a break and close below the C. And if I were to go to take this thing short, we have to find out where would we be able to get in. Now all this area, all these wicks over here have been chewed up already. And so right now, the only thing that's left is this part. This is from yesterday's. We drew this yesterday. This was the low from yesterday. If it breaks this little red box here, if it can break this area, we could be getting a nicer move down. This could be that area that we were looking at yesterday from over here. Spread this out a little bit. Here's where the price is right now. Yes.
I wonder, what do you think of wedges like this? The shape, isn't it too sharp for you, or?
Yeah, I don't really like this a whole lot.
I'm gonna post mine in the chat, trading view link, but it's just an edit of the wedge of yesterday based off the last alert.
Yeah.
But it goes over 1, 2, 3, 4 sessions, 4 days. I mean, it's really huge, actually.
Yeah. If basically, if it breaks here, we're probably still looking at a area right here that would go to. So the question is, would there be enough room? And I'm not so sure that there is. If we go from here, that's at 56 down to, that's only 6 pips. If you get the break of this, by the time you get the break and get the close, you're already into this zone right here. So, and this might be the area to possibly take it long as opposed to taking it short unless we get a clear break. Here's the next target zone right in here. This would be the next target zone, which is a little bit what we were looking at yesterday. Now, if you look from the Fibonacci standpoint, here's our green line, here's our blue line. Let's just move this over. This is our 21 pip range. I believe it's going to be 2161 to, yep. This is our 21 pip range right in here. And I would say that if I were to be taking this thing at all, I would probably be looking at taking it long when it comes down, bounces off, because it's still maintaining this this wedge area here, and it does a lot of head faking. There's 20 pips to the upside. And moving averages, let's go to our 1 minute chart and see if we have anything different on this. Moving average crossover. This would be an earlier entry to here, but there's no room to, I'd have to wait for, what I'd be looking at now, I'd be looking at, if I did anything at all with this, I'd probably be looking at it to come down here and bounce, come on up to that area. I'd be looking at staying more inside the wedge until I get a clear break of the wedge. Because this yesterday's wedge is still basically the bottom of it's still in play right now.
Yeah, if that, I just looked it up, it goes all the way back to the 4-hour chart. If that breaks, it's gonna be a huge move, I guess.
Yeah. But all it's really doing is just staying inside a 4-hour range. And it's, the range is getting, the upper range is getting lower. The bottom range is, this is still holding, this bottom is still holding pretty tight. Once the bottom breaks, then it's going to go on down, but we just don't know. Let's see what RCS tool is saying here. Is spread by 4. Swiss is strong. Swiss second currency of the pair, strong by 4. On the 1 minute, let's go back to, I tell you, let's do this. Let's get to the 15-1, and we'll put this back on a 5. Let's see. I'm looking at something else here. Hang on a second. Yeah, let's see. If we're looking at our 1 minute charts, see if we can. I'm just going to take this off so we don't get any more confused than what we have. Crossover, the moving averages are pointing down on the 1 minute. So all the moving averages in the 1 minute are in alignment. I think it's getting, they're all consolidating on the 5 minute. We have all 3 of them are right bundled together inside of our wedge. And on the 15 minute, our moving averages are all in proper, well, no, the green one's got to go below the yellow. So right now we're getting crossover here on the 15 minute chart. Strong wick up, and this thing could, if this thing closes, again, I would be tempted to take it long based on yesterday's history, but I'm not going to take it at all. If it does break, I would see it needs to close inside this white box here. In fact, all of our 5 minute moving averages are all bundled together. We've already had the break over here. Here's the low, here's a high. Here's a higher low right now. And we don't know where that's going to end up. Let's just take it from here. And Matt, you can jump in here anytime if you want to comment on what I'm doing here. If Matt's still in the room.
Yeah, he is, but he has migraine. Or maybe he's chasing the squirrels again.
Yeah, chasing squirrels, or probably chasing a 3-year-old.
Yeah,
So here we
chasing
had,
squirrels, the 3-year-old, and the little one too, and
yeah,
the 3-month-old. So
but this was a strong move. Here's a strong move away. This is on a 1 minute chart, so keep that in mind. It was a strong move away. Here's a low, higher low, and if we move, and sometimes the illusion gets a little bit off, but if here's your low, here's a pretty much a higher low or equal low right here. So that does validate this. So that's a near hit. Now we're looking at this thing starting to bounce back up. Let's see if we get the moving average crossovers. And if it does cross over, I'd have to see a break above this level right here. And then that only gives 8 pips to the top of the purple wedge, the purple trend line. That's the higher time frame trend line we drew earlier. So if you were to take it long, you would be looking at a risk. How far would be the risk? If you came all the way down here, that would be 15. So right there's 8. The bottom of the trend line would be your stop area. I'd like to see a crossover of all these. Have the moving averages crossover, come back, and here's we had the crossover over here. They all came up, started going up to, that's where it tested. Now it's retesting this area. Go to our 5 minute chart and see if it gives us a different picture. And I said everything's consolidating. I would need to see a close above this candle right here to go long. I just see a close above that, and then I would use the bottom of this for a stop. I should probably have to go down to the bottom of a couple of pips below the C there. That'd be at 54. That's at 65. So that would be pretty much a 10 pip stop to the bottom. Go to back to our 1 minute chart. So a little bit of a zone right in here. So if we see it come down, wick down into here and come back above this trend line right here. Right now, this is still a low, a higher low, a higher low. If it can break this low, the actual price, now we have a little trap down here. I always call this a trap down in here. On the alert. It's always a good practice to let the price come to you. Don't go chasing it. I'll put a buy stop in at 90.67. See where my prices are. There's the ask. Bid's way down below. Okay, so we want to keep it. Uh, 60, 90, 65 is my line there. So I would give it, say, 90.66. So put a buy stop in. Try this again. Buy, stop. $90.66. 8 pip. Now I'm going to go with a 7 pip target. 10 pip stop. I put my stop down below here. Put my target up. Right to where the bottom of this blue candle into this zone before it gets to the top. That would be my target. Here's a nice move down. Here's yes, Christine.
I know myself, sometimes I get confused, and I know it's terminology based, and I should know this by now, but you know how you're saying like a buy stop? There may be
Yes.
like other people in the room that may get that
What
definition differentiates from just putting in your regular
yeah, basically a buy stop. What a buy stop does is it says that think of it as being, if you had a price that was stopped, it basically, how should I put this? A buy stop means basically if it normally if you had a buy, you want to say a buy limit. So you want to buy it down here at the limit. So if it comes down here, I would want to buy it. And so let me just do that. We have a buy, here's a buy limit. And we're going to say if it comes down to, let's say this area, right, this price right here, 90.59. I'm not going to buy it unless it gets all the way down there. So if I go for a buy limit, see what we're saying is that when it gets down here, I'll buy it. Up here, when you say a buy stop, that means it's already above it. The price that you want to get in is already above where it's at. So what you're saying is that if it comes up, it would be like stop me out, but what it's doing is it's going to enter it above the price, but a stop limit is going to enter it below the price, or buy limit. So you're saying my limit is, I'm not going to get in until the limit. My most favorable place to get in is down here, because you always want to get down lower.
Right.
But you can't take the trade. You can't put an order in above it if you put a limit in. So it's got to be a stop. So basically what you're saying is if it's coming up from underneath, if it hits this target, I expect to keep on going. So I'm going to get in right here. This is my price I'm willing to be filled. Now the price is going to have to come back through 2 pips at 1.8 pips, and I'm filled now. So now I'm filled right at that spot. And you see that the price never even came in, but I'm already filled because of the spread. Basically it says, okay, I want to get filled here. Well, that means that the sellers were willing to take the trade right here, but the price never got up here, but the spread got me in. The same token as if you had a buy limit down here, you would have your limit price here, and the price would come down to maybe like where this blue candle is here, and it filled you all the way down here.
Right. Okay.
So a buy stop means it's coming in from the bottom to get you in. A buy limit would be it's going to wait to pull back to you before you can get in. And this sell stop is the same way. If I wanted to go short, I would put a sell stop in, saying, okay, I'm thinking the momentum's strong enough to where it's coming. If it gets me in, it's going to keep on going.
Mm.
My thought here is that if it gets me in, it's going to keep on going up.
Right. Okay.
And that's the difference.
Thanks.
So right now I'm in the trade. I'm looking at saying this is I would not want it to see it close below the wick of here. Here's a trend line. This was our higher low. I don't want to see it. If it closes inside this area right here, then I want to be out of it. So I can move my stop up a little bit. Because if I'm right about the direction of the trade, if I'm right about where it is, this thing should keep on going. If it comes back and retests it, that means it could possibly go lower, and I don't want to give up any more pips, because if it gets me out, then I might say, well, maybe I need to reevaluate to go short as opposed to being long. So here's, I would consider this to be a trap. Here's the blue candles of the wedge. Here's the previous low. Actually, I kind of like this candle, like this. This is the area. I'd like to see it close below this area. Or if it comes back into this price, I'd be looking at maybe taking it long. If it can't close inside here. And as long as everything here is moving in the right direction, I should be okay. And if I'm not, I want to get out sooner because it may, if it's playing in this play, if this made the new low, it should be making a higher low, but it should be up here, up in this area, at least in this area right in here. There's a little drop, base a little bit. There's like a little wedge right there. I move my stop zone somewhere in this area right here. I want to keep my stop somewhere. I want to keep my actual stop somewhere below the trap. And I can just keep on moving this thing up until it parallels where the wedge is. A little bit of a pullback. I say notice that it got me in the trade before we even had, it got me in on this candle right here before we even had the wick. That's your spread. That's the spread you have to deal with. And so you're losing 2 pips going in, you're losing 2 pips coming out of it. That's why when you get up to these areas and you say, okay, I'm going to take a hedge against it, you're already negative because of the fill and the spreads. And now you have 2 positions in opposite direction that are both negative. This is making a nice strong move down. This area right here is a area to be concerned about. If it can break this, it's going to head on up. We have a little bit of a level on a level here. This has to pretty much has to get through both of these little drops, base, drop, base, drop. This is going to be the first one it's going to get through. It will probably take this one out and retest this one. But by that time, we may even be up a few pips. We got in at 66. At 73 would be our 7 pips. So it'd be the top of this. So here's our 7 pip. Actually, that's 6 pips right now. It's going to have to move 7. It's going to have to move 8 pips in order to get that one filled. If it can come up and take this out, and now it's also looking at the top of here. Do I have any questions from anybody?
I might have a question for Matt. If he
Hey,
would,
what's up, Brent?
would you maybe know what whole moving average I could use that changes colors? The right one. We talked about this yesterday. If you know what I mean.
Let me see if I can pull that up for you here. There's a couple different whole moving averages you can possibly use here. Let me see. I have some of these are proprietary.
Maybe the one you guys use.
This one, actually, this one. Oh, you're gonna need a code for that one. Let me see here.
New alert.
Another alert. Okay.
Euro. That's been a while.
Euro US. That might be.
Descending.
Okay, take a look at that one while we're in this trade here. I'm going to put an alert on. I'll put an alert on the stop, and we'll see if we. Let's see. Alert. An alert there. And I'm going to put another alert on this area right here. See if it gets filled. And let's go to the Euro USD. So we have a Euro USD 930 descending. So let's go see if we can find that one. Duplicate this.
Sorry, Al, I was away from my office for a minute.
Oh, you're fine.
I don't know if you ever want, now Beach Panda's signed off, so I'm not sure if you're interested in seeing his, whatchamacallit.
Well, it's actually, I'd like to see where he got the alerts and why we didn't. That's my biggest question on that. But I'm going to take a look and see what his screenshot was.
Yeah, yeah. So you tell me when you want to see it.
Yeah,
I don't know if you want to see it during
yeah.
the session or after.
Yeah, we could just do it during after the session. Might be better
Okay.
actually.
Sounds good.
9:30 December.
David, do you know where he's from? Is he Eastern Standard or?
He's Eastern Standard. He's in Miami.
Okay. No, because Al and I both are Eastern Standard, so.
Yeah, I'm really curious of how he got it and we didn't. That could be a problem if that's
Yeah, that's odd. That's odd that he got an alert and none of the
No,
other.
Got a couple, Matt.
He got a couple. He got a couple. One at 7, one at 5:45 a.m.
So we have a descending wedge here. So let's take a look at this. We have moving averages these are not in the right direction to go short. These are in the direction to go short. So right now, 2 of the 3 say is looking to go short with descending wedge. So I'm going to start up here. My bigger screen here. Right now, initially, I'm going to be looking at this area right in here. We had this move up. There's a high. Here's a low, lower high. So I'm going to start with a couple areas for targets. Pretty much what it boils down to. From here to here to here, low before the wedge, before the alert. And we don't have any from our A to C, no hits in between here. Now if we can, and nothing so that's from yesterday. And we have, here's a low, here's a high, here's a higher low, here's the alert. So now we're looking at this area right in here for so here's the descending, strong move up, a little bit of a wedge right in here. Let's see. I'm going to go with, here's a high, here's a low, here's a lower high, here's a higher low tucked in right there. Make this our secondary. Go to a 1 minute chart and see where things fit. Tuck that in, tuck this one in. That's the same point. Still no other hits. This is not a, so we're getting here's the wedge alert. Take this one over. Right now it's consolidating. This area broke. We're still looking at this area down here. So right now we have the moving averages are crossed over. So if we were doing anything, we'd be taking a short, but I'm not looking. I'd like to see a close below.
Al, why wouldn't the D be over to the 2 red candles to the right?
To the right, because here's where the alert was.
Oh, I thought we're after the alert now.
It was at 9:30. Was that right? 9:30 was the alert.
Yeah.
Yeah.
Yes.
So this is the candle where the alert. This is the opening. The alert was generated, which at the open of this candle where the yellow line is.
Mm-hmm.
So I want to try and keep whatever I'm looking at. I'm trying to look and see what the alert was looking at,
Okay.
and so whatever it was to the left of where that line is.
Okay. But in the past, haven't we just, I'm not debating the situation. I mean, I'll stick with that. I just thought before sometimes we've moved our letters.
I will sometimes, and you're correct about that. Sometimes I do, but it's
Okay.
I try not to any more than I need to.
Sure.
And a lot of times it's because, see, this one's starting to break down here. And let's see.
I don't want to mess this up. Continue
We
with
have 3
that.
holes. Now we're looking at, let's see. There's a close. This would be an early, see, here's really where the wedges are, what we're looking at. Here would be a target more so than a entry. Now the question would be is if you can get an entry up here, that'll give you enough room for a target. And actually with this candle, you have the moving averages, you have the break, you have the close in this zone right here. By the time we get this drawn out, it's going to be done. Look into this, look right there. See if it closes below that one. We got the close inside there. This wick is still holding. I'm going to wait till it comes out and test this area. Wait for this thing to come down, hook, pull back, and then hook again. Take a look over at the higher time frame. See where our possible targets are. See, we've had been in there within a couple of minutes in order to catch that move down. And our Swiss has an alert. Probably just got Swiss. Probably just Swiss is coming up into hitting my target on that one. So what that's telling me is that the U.S. Swiss, the dollar is getting stronger. And if we look here, we have the dollar and the euro, 6 pip spread. Found some buyers right in here. Coming back and retesting where we had these say we wanted to close inside this box. True to close. But this area right here is still holding. Now, what we don't know is if this thing is going to break out of the bottom or if this is just a retracement before it goes back up again. This is a little bit what happened with this yesterday. Came back up. This area is still holding. All those indicators saying it's go short. Everything is saying strength to the dollar. But we had some buyers in here. We want to make sure that we have 7 pips before, if it pulls back, we want to make sure if we take it short up here, we'll make sure we have our 7 or 5 pips to get down to where it can break here without, and keep us out of harm's way. This is the area right in here where this is the low. So the end of that wick. We did get it closed below, so it did break that wick. So right now it's retesting the zone. And look to take it short. And if you took it short, and when it came back into this area right here, if you took it short back in this area, you would want your stop above the 62 moving average. See if I can get into this thing to show you where I'm at here with this. I'll just use this as I'm just going to go market order to get in short here. 7 pips, 7 pips. There we go.
All right, I'm going to have to get prepared and stuff, so I'll have to leave you guys for today.
Okay, Ruben, thanks for your help again, and see you
You're
tomorrow.
welcome. See you guys tomorrow.
Bye,
Yeah,
Ruben.
take care, Ruben.
Good
Ruben,
luck with
take care.
catching them pips.
Yeah.
Bye.
This one's looking good so far. We had a hook down here, where it came down tested. Hook came back up, hooked again. Still have our whole moving averages are good. Our dollar is still saying the strength to the dollar on the euro. Euro is the first, the dollar's second pair, so strength is to the downside. And then we'd be looking to see if they have any Fibonacci targets that we can look at. And we had this the green demand line, which is actually now that's supply. Came back in, it broke out of that. Now it's looking to come down to possibly right here, this blue one right down here. So this would be my target area. See if we can get some pips out of this. Again, I would like to see it, if we get a close below this B line, if we can get a close someplace in here, then we should be able to possibly go on down to let's see our 1 minute charts. Put some fib lines on here. So from here to the next area would be 7 pips. Am I right? Yep. If we can get it closed below this, we could be looking at this as a zone for the next, this is the next 7 pip level. But we need to get the close in here. It hasn't, it's still finding some buyers in here. Let's go to our 5-minute chart where it's not quite so volatile. So right now, this is the second rejection of this line. This candle here rejected it. This one here came down a little bit lower, rejected it. So that tells me that there are some buyers in this area right in here. And when I say enter on close, that means pretty much means like if it comes down close, if it closes or breaks it, this actually ends up being what I would almost consider to be a supply zone, which is once demand was now supply. So it comes back up. Is now there's sell orders in here. There's buy orders down in here. Now the question is, which way is it going to break?
Hey Al, I like Euro USD. I like trading it a lot better than some of the other currency pairs. I find that it just moves, I don't know, a little bit more, not really predictably, but it's not as sporadic, or whatever you want to say.
Yeah, I mean, I go through streaks where I like certain pairs better than others. I mean, Euro USD has been okay for me lately. The Swiss was really good for a while. Now I'm not so sure about the Swiss, so I'm just going to let that one rest for a little bit. Although I think I did get my target on my, I did get the target on my Swiss. Now we could probably be taking this thing short up in this area. This is almost like a replay of what it's almost like a replay of what yesterday happened. And,
yeah, with the Swiss, it's in a complex correction. It's in a really weird spot right now. So it's gonna cost people some pips if they think it's just gonna turn around. So if the entry is not on point, the Swiss is gonna cause some major headaches for people.
Matt, what are some other pairs that you like?
I really like the Kiwi, but it all depends on what's going on in price action right now. Like, it all depends on the market. I don't overly favor one currency more than the other, but I do like the pound. I do like the pound. I really don't like the Canadian dollar. Even though it's my currency, I really don't like it.
I'm with you on that, Matt.
It's so tied to oil, and oil has a tendency to, I don't know, play some special, some special things.
speaking of oil, remember we have an oil report at 10:30 today.
Yeah, don't touch anything to do with Canadian, because I'm saying like 30 or 40% of the currency value is connected to the oil and commodities and whatnot. Let me just take a quick check, see some of the currency pairs that I like to trade. I like GBP USD. It was probably, and it's maybe just because I had the best trade of the entire year on that currency pair, and I've been always looking for another opportunity to hop in there. But I mean, when you can make 55 pips on with a 5 pip stop loss, you're in a really good spot. And
That's
so
good.
that's what that one was. So
No,
I
I
have
like
a
it.
little bit of bias towards GBP. Hey, can you guys still hear me?
Yep, we hear you.
Okay, good. I do like NZD USD right now for a buy. Like if we get a setup, it could be actually pretty nice. So that's one of them that I'd be looking for. On the long side once it finally catches the bottom. So USD JPY, we're going down, and it's gonna probably be a while before it actually turns around. So
I just had a look at the NZD. It does look really nice, Matt.
yeah, sorry, I had to mute myself. I have so much background noise. So let's see. So do we have anything new in the last little bit, or
Well,
not
we're
really?
still,
We're waiting?
basically, I took that, I showed that U.S. Swiss trade. I didn't take it live, but I took it. It did make the target on here. Is coming back up to retest this major trend line coming down. And then the euro, we did get the alert at 9:30 on the euro US, which I'm taking it short. I took it short up here in this zone, and we're looking at a target to come down a little bit lower. Right now, the ultimate target is going to be here by the B area, which is the last hit on where our lower trend line was. And so that would be, if it breaks through here, this would be where the target is. And we're looking at this zone for, let's see, I'm going to go with this would be the target zone right in here.
Yeah, US Swiss on the 30-minute made a massive wedge. And so remember where we had that trend line where we've been holding that trend line for a long time? It actually just broke it. And the other side of that is that if you draw a trend line from the bottom of USD CHF, you're going to see that it's now on its way up. So this would have been.
Oh, we just
That
lost you.
we're looking at, this could be the end of it.
Matt, you cut out for a little bit.
Yeah. Are we right now we're breaking out the bottom on the euro US at the moment. Right now it's coming into our zone where I say I want to see it close. It's breaking the wedge. We had a nice little retrace. It came back, tested. It came back, retested where it broke our first wedge here. And now it's coming into we're looking at a target. If it breaks, looking for a target down below here at the somewhere around. This is the bottom of this is the area where I'd like to see it get into to retest where the B is. We have news coming out at 9:30, so we have to, or 10:30, so we'd be aware of that. We don't have the 5-minute close yet in here, just barely. Close below the Fibonacci line, which is right here at the 46 level. So we did get the close in here, and our stop would still be up here somewhere between